Hi, this is Akshara Menon, analyst at PMS Bazaar, welcoming you all to the Friday webinar of the role of female fund managers in the alternative industry. We are a bit late to celebrate Women's Day, though, but we don't need a day to celebrate women. So, with saying that, we have got three powerful women on the couch today. So, let me start off with introducing all of them. Let me start off with Ms. Devina, ma'am. Devina Mehra has completed her MBA in the year 1986 from IIM Ahmedabad, the #1 business school in India, now also ranked as #1 in Asia. She holds a graduation degree in mathematics, statistics, and English from Lucknow University. She's a gold medalist at both IIM Ahmedabad and Lucknow University. She was awarded 8 gold medals at Lucknow University for academic performance and broke the 60-year-old record for the university for the highest aggregate marks scored. Ms. Devina Mehra also heads the research and fund management at First Global, the cell in charge of identifying the key changes and inflection points in the market across the world for the global clients. First Global's research independence and unbiased stance and our ability to discuss the trends ahead of the street have made the global research again tremendous following among the institutional investors worldwide. Welcome you, ma'am.
Thank you. Thanks for having me and for a very kind introduction.
Yes. So moving on to the next speaker of the day, Ms. Aditi Mittal. Aditi Mittal is a CA by profession with close to 20 years of rich experience in fixed income and credit market. Aditi began her career in AK Group, founded by her father, Mr. AK Mittal. As a humble start to her career, Aditi commenced with her professional journey working in accounts, finance, operation, and HR with sole purpose of learning the ropes of business, prove her mettle, and build her own name while pushing aside the general stereotype. She is a national co-chairperson of Associated Chambers of Commerce and Industry of India for Corporate Bond Community since 2020. She plays a critical role in bond market in India, responsible for developing, deepening, and nurturing the debt markets, as well as women behind the curtains of AK Group, one of the largest dominant players in Indian debt markets across all fixed income products. Welcome you, ma'am. Moving on to the next, Ms. Geetika Gupta is a fund manager for portfolio management services and alternative investment funds at ICICI Prudential. Having joined the company in August 2020-21, she has over a decade of experience in investments, both in sell-side equity research and buy-side research. Prior to joining ICICI Prudential, she was a vice president at First Global Advisors for 6 years, where she was responsible for fund investments in Indian equities. Prior to that, Ms. Gupta was a research analyst at Kotak Institutional Equities for 4 years, covering the banking financial services. She has begun a career in 2007 at Lehman Brothers, covering the US equities, later interned with Morgan Stanley Singapore in Investment Banking Division 2010. Thank you, ma'am.
Thanks a lot, Akshara, for having me and for the long introduction.
Welcome you all in behalf of PMS Bazaar for accepting the offer in spite of being in maternity leave. So, Geetika ma'am. So let me start off with one common question. So what does women power mean to you? To start off with, let me start with Devina ma'am. What does women power mean to you, ma'am?
Actually, when I started out, I never looked at myself from the gender lens, and still it is, I have to kind of consciously do it, because for me it was that even when I topped IIM, some of my batchmates said, "Oh, you've sort of defeated the boys." And I said, how does this matter? How does gender matter? This is a gender agnostic area. And so also, even when I started working, thankfully the market completely is gender agnostic. It does not care who is investing or trading. So it's always, but now, being older and wiser, I think there is a sense in underlining the woman bit, simply because girls and young women need role models, and it is important that they see women in professional settings, whether they're scientists, whether they're civil servants, whether in finance, so that they can see themselves there. Because unfortunately, in investing, still women are in a very, very small minority. when I started working with Citibank, I was the only woman officer, all India in the investment bank, which included, what's now called investment banking plus treasury, money markets, all of that put together. There was no other woman. And so many years later, I still find only a handful of fund managers. And I find also even women in general don't take charge of their own finances and investments. So a long way to go. So I hope women come up to it, and then they are supported in doing that. That's I'm sure we'll be discussing sometime later in the show.
Definitely, ma'am. So over to you, Aditi, ma'am. Like, what do women power mean to you?
I will echo what Devina said, that when we are in the markets, it's gender agnostic. It doesn't bother whether you're a man or a woman. But there are softer aspects. For me, a woman is a creator. For me, a woman is a binding factor. She binds a house together. And when she comes to the corporate world, she brings in the softer aspects. She brings in that EQ level, empathizing level, which is also very important in sharp world of finance. Because if you look at from morning 9 o'clock, for me, the markets are till 5 o'clock. We are at it. We just have enough time to breathe. But I've usually seen that, and sorry, but I'm not saying men would not, men folks would not, they would hate me to say that. But a EQ and an empathizing question is far higher when it comes to women. And I completely agree with Devina ma'am that it's good to see that that there is an equilibrium that is being struck here, and we can see more and more women taking more active role going forward in the financial markets.
Thank you, ma'am. So over to you, Geetika ma'am. Like, what does women power mean to you?
Yeah, so thanks a lot for the question. Actually, similar to what Devina ma'am said, it's very similar for me. I am from the same campus. I am Ahmedabad as well as IIT Delhi. So I've always been in male-dominated organizations and institutions, but I never looked at my accomplishments from a lens of whether I'm a male or a female, or I've done this being a woman. So, very similar experience. And now when people suddenly wish you Women's Day, or, there are these kind of discussions, suddenly you realize the importance of, you being among the very few women in the investment industry. So I think it's, but, as I reflect back and look at, the number of women in the industry, and I often find myself as the only women, in a lot of discussions and a lot of meetings. So that, the number of women are actually very less. For me, women power means getting heard and, our opinion getting valued, in terms of the center table meetings where important decisions are being taken, done in terms of what companies to invest in, where to put your money. That's what women power is for me. And I would like to extend it further. It's not only getting heard, it's also about having that freedom and the power to ask for what you need in order to deliver, right? Like, women have special needs. We are at different, as Aditi rightly mentioned, we have different roles and responsibilities at home. So there are times when we need special, resources at workplace as well in order to realize our full potential. So asking for that is, power for me.
Oh, so I can keep this as a second question. There's that woman plays a multiple role. Of course, a man also plays a multiple role, but a woman playing that role, she should put her 100%. Being a mother, or being a daughter-in-law, or being a wife, or being as an employee, she should also chase her dreams. So putting both into the plate, how should one customize it? Because being a 25-year-old person, and have just started my career in finance. So balancing both, because you guys are very experienced in it. So people like us can have some advice on how to manage both. Like, over to you, Aditi ma'am.
Actually, as you rightly said, we definitely play multiple roles, but I would also say men also do, but this question is never asked to them. It's always asked to us, on lot of, I was at discussion panels. This is a popular question which comes up, and I wonder why. Because it's both, I would say both the counterparts, whether it's a man or a woman, they play multiple roles. However, having said that, I think women are blessed with an attribute of called multitasking, which I completely at times wonder. I said, men I think, and that's personally completely my, I would say, opinion, that they cannot multitask as well as we do. However, at the same time, I'll put it this way, it's about setting expectations, creating infrastructure around you, and having a clarity of thought as to what gives you that inner pleasure in doing what. And if you're able to do that, whether it could be raising kids, putting families together, could be going to work, could be reading books, and that self-time is very, very important. And if you're able to allocate that time, it just makes you far more productive. So it's easy to complain, but it's easier to make choices and prioritize and use those 24 hours in the most efficient manner.
Thank you, ma'am. So over to you, Devina, ma'am. So
okay, so right. So I would like to first say that you are 3 decades younger than me, and you are asking this question. I mean, when I was 10, I thought I always thought from first principles that why should things be different for boys and girls, men and women? So as Aditi said, this question is never asked of men. I mean, this is one of my bugbears, that nobody ever asked Sachin Tendulkar that you played cricket for 22 years and you were married and you had 2 kids and you were away for months at a time. So didn't you feel guilty? How did you manage? Just imagine a woman in his place would be asked that every day. Elon Musk, I hear all these things, that how does he manage, whatever 3 companies at once. No one ever asks him that he has 10 kids, that how does he manage 3 companies and 10 kids? That, it is just assumed that those 10 kids would be looked after by their mothers, and he doesn't have to bother his pretty little head about it. So I'm like, this kind of question bothers me, because no one should expect a woman to be a superwoman, that she should be, give 100% as a wife, 100% as a daughter-in-law, 100% as a mother, and then 100% as a professional. She is a human being too. And if you look at data in India, female labor participation is, about the worst in the world. There are only 2-3 countries below us, let alone Bangladesh and Sri Lanka. Nepal and Pakistan are way ahead of us, and our rate is still falling. And to me, a large part of that doesn't come out of the workplace. There are obviously issues in the workplace, right, from equal pay and all that, but a large part of it comes from this kind of thinking from the family and the society, that this is what is expected of a woman, looking after the house, making compromises in her career, that if a man gets transferred, she should also get a transfer or change her job. I mean, I'm just so sad that 30 years hence we are still where I thought of it all those years ago, and I had my priorities clear. That that I got conned anyway is another matter, but that is not the point. At least I knew what I wanted. And so please don't settle for this kind of a compromised life where the expectations are more and more from you, and where you are responsible for a lot of things. And this multitasking hat, again, it is putting you on a pedestal, but it takes a toll on you. So as a batchmate of mine was telling me, like, he is in Hong Kong, and he said, like, my boss is he's a banker in Singapore, and he said, like, my boss is a woman who says that on Sundays I am getting the kids to catch up on homework, but my husband obviously needs a break. He's off playing golf. So let's not have that pattern. So think carefully of the question, because otherwise then girls self-censor. They think that I must take care of all this, so let me take a career which is one notch below what my dreams are, because otherwise I will not be able to manage all these other things. Yeah.
Very true, ma'am. So over to you, Geetika, because you are a new mother now. So how are you managing?
Yeah, this is actually my second kid, but I think early on, after I had my first kid, I realized that this talk of superwoman and wanting to do everything and giving 100% to everything is just not possible, right? Like, as women, we have to learn to delegate and learn to say no to what is not required and what is not relevant. We can't take up every role and responsibility and give 100% to everything, being a mother, being a daughter-in-law, wife. We just, that's too much to expect. So at least from me, from a time management perspective, I always use this urgent versus important matrix a lot and this is something I stumbled upon a few years back, and it's been very helpful. Something which is important and urgent obviously has to be done, and then you prioritize your work. But something which is not at all important, one has to learn to say no, and it's actually should be okay, right? And it has it starts from home, having the right resources, having a partner who's understanding, having a family who understands that there are things that you want to achieve as a woman in the workplace. And yeah, I mean, we can't do everything. So this is something that I've learned early on, and I'm happy that's the way to go. So a word to all the young women: don't think that you have to do everything.
Okay, some little is more. That's what you want to say. That's
And
nice.
don't lose sight of your dreams.
Very true. And that is one which is making me move. So never lose your dreams. So being in the industry for so long, so have you ever felt that you are being stereotyped, or anywhere in one part of your industry, in your past experience, have you ever felt that you're being stereotyped because of some incident that you want to share? Like Geetika ma'am, if I want to start with you.
I think there are a lot of stereotypes for women working in finance, and it's particularly heightened in investing. I think within finance, for example, banking is a wonderful example. There was a time when the larger banks in India, SBI, ICICI, Axis, all of them were run by women CEOs, right? But I think that glass ceiling is yet to be broken in the investment world. It's still, I do find it as a men's club, or at least it seems like a men's club from outside. That's why, which deters a lot of women to actually even think about it as a investment opportunity. And I think that needs to change. We need to get more women into the discussion of thinking about managing money, how to think about finance. And honestly, it's not just a workplace problem. I think it is a problem which starts at home, right? Like I have so many successful female friends. There are country heads, there are women who are successful entrepreneurs running, Series C, Series D startups, running huge teams. But when it comes to managing the money in the house and taking the investment decisions, somehow those decisions land up, on the bank's plate, right? They are the ones who are thinking where to put the money, where to buy real estate. The women just don't get involved, or they're not involved, right? So that thing needs to change. Right from our workplace, only then we can have more women getting into the discussion and taking this as an opportunity.
Nice, thank you. Devina ma'am, what about that? What about the statement, or have you ever been stereotyped?
See, sometimes you find people react differently to women. When I started out as a credit analyst and then a research analyst, many times when you meet companies, people are not comfortable making eye contact with you because you're a woman. So if you go in with even the junior most man, they would rather look at him and talk. And this sometimes I still find happens, and it may not come from a very bad place. It might just be the upbringing of those men who grew up not talking to any females outside their home. So that is one. And of course, women get interrupted much more often. That data is there all through the corporate world, even in the US Supreme Court. If you are a judge on the US Supreme Court, if you are a female, you will get interrupted more often than a man would. So everywhere, even Indra Nooyi wrote about the PepsiCo board, same thing. So, that people will talk over you. So those things you need to be a little cognizant of. I probably never really put my foot down on that, and I should have more often than I did, at least. So those are the things. But what Geetika just spoke about is also right, that women don't take charge of their finances even when they are successful professionals. I also have friends who are senior scientists, senior civil servants, senior corporate people, and part of the reason is that so much of the physical and emotional labor of the family, running of the household, is on the female's head, that this one thing the husband says that I'm happy to take care of, and she just looks at it as one thing off my plate. So you need to renegotiate those roles and say that, you take care of some of this other stuff, but unless you're controlling the finances, you do not have real independence. Just that is the thing. Without financial independence, and that means not just earning a salary, but also managing that money, you do not have real independence. So this is so important. It is a cause for me. I periodically write, I make videos on this, that please take charge of your finances. And it is not as difficult as it seems, because the men in your life may even act more confident, but doesn't necessarily mean that they even know more.
Okay.
Write it in bold letters that confidence does not equal competence. And a woman makes a loss, everybody jumps on her and says that, why did you get into this? You are stupid. You didn't know anything about it. A man makes a loss, half the time the wife will dare not even question, why spoil the peace in the home? Let him do what he wants. So it's very different expectation. So you have to do this consciously.
Yeah. To Aditi ma'am, I have one question, because there's always the thing, people get their things easily. So have you ever been termed as a nepotism? Like you started your career in your father's office. So have you ever been stereotyped there?
So Akshara, I'll put it this way. My experience has been on the other side of the table. So today also I have about 40% of our population is women. So I have more than about 125 women working for us. And it's a hardcore finance market. Even being on the other side, I will echo with Geetika and Devina. I have had personal experience younger in life where I have gone for client meetings, and of course I was way younger, so people look at me, and especially if there's men folks on the other side of the table, like, oh, where's your father? Why is he not there? They would hesitate in dealing, and that could be coming from their educational background, from their family background, how they've been brought up, or what their perceptions are. So there is truth in that. But at the same time, I would say there is a lot of progress that we have made. Because today, if you look at any sector, there is, I would say, enough emphasis that they're putting on diversification. They are bringing in women on the front foot. And I would say education has played a very important role in men also understanding that we are on equal footings and we contribute equally to the house. And there is some merit, or rather there's a lot of merit to let women also be the breadwinner in the house, and they could also do an equally good job. But in spite of doing that, I would again say, I completely agree with Devina ma'am and Geetika that in spite of doing that, when it comes to investment, we hand it over to any of the men folks. Could be the father, brother, or the son, or the husband. And I completely agree with Devina ma'am that it's probably we have so much on our plate, and going back to your previous question, that we say one thing off our plate. Rather, we should say, if you're good at it, better do it. Why delegate it? Let's take charge. Let's take control, because that's a messaging we are passing on to our daughters as well in times to come. So get control of your life, prioritize, make wise choices, do what you are best at, and delegate which you think is not your priority. And I'm going to say stereotyping is not only financial markets, it's working women in any sector. Yeah, it's on general basis. The first question, so I think I'm not going to put it to you, but at least I experienced when I delivered, oh, how many months are you taking off? I said, no, I'm getting on to work tomorrow on the phone. I don't need an off. And when I need an off, I will go, irrespective of whether I've delivered or not. So these are certain circumstances which is people stereotype us to say that this is only how the behavior is going to be, which I think is rapidly changing. And at least, and I've seen in my environment around me that women have become so independent that at times it's 8 in the night and I have to say, please go back home. And they're like, no, I'll manage. I have enough infrastructure. I manage it all. So that's a happy scenario to be in.
Yes, definitely. So over to you, Devina ma'am. Like there's a usual statement, women are more patient investors. Do you want to concur this statement, or do you support this? Like women are more patient in terms of investment?
I don't know the data for this, and whether patience always is a virtue is a question mark. But data does show that the results for women investors are better than that for male, but the confidence level is lower. So men are more confident, but the results are poorer. So that is why I was saying that confidence doesn't equal competence. And Aditi said that if you are good at it, take charge. That is a cop out for most women, because most women will say, I am not good at it, he is good at it, because he is acting more confident. So if you think you're not good at it, nowadays it's very easy to get educated. And also because most of your returns come from asset allocation, you don't even have to look for that next multi-bagger. If you understand the principles, you pick a good advisor or a manager, that is good enough. So, I mean, don't say that I'm not good at it, which is usually the woman's excuse, that I'm not good at it and let him do it. So, I mean, I would put that caveat to what Aditi said.
So, like, you were in a family, but you had two brothers. So, but any comparison in terms of being a girl or being a boy? Was there any comparison? Because every discrimination starts at home. So, but any
yeah, I was very lucky, and it is unfortunate that I have to say lucky, because my father wanted a daughter even the first time around, and then my twin brothers were born, and my mother thought, 2 kids is enough, but my father said, no, without a daughter, the family is not complete. So he said, so that's how I came along. And now that I look back, in small things and big, my parents never discriminated. So it was whether education, career, obviously, no discrimination, but even on a day-to-day basis, like my father used to have this thing that from in the evening, the kids should not sit at home. So either you have friends over or you go out playing. So it was an unwritten rule for that from 4 to 6, you should not be seen at home. Whereas I now talk to some of my school friends, and I said that I used to come over to your place much more often than you did. And most of them would say our parents were strict. They didn't like us roaming around in the evening. So it was very different. I mean, even after I finished my MBA, started working, my father's whole thing was that go to Harvard and do a PhD. So he did not think that because you are 24 and 25, that if you go for a PhD, it will be too late for marriage. It never occurred to him. So, so my upbringing was very different. So, but I later on realized that that's not the way most kids are brought up. I was quite a militant feminist. So if I found anything which I thought was sexist in a newspaper or magazine, I would write these letters to the editor at age 11, 12, 13. And my parents would actually be very proud that, that all those things are getting published. So I was never told not to have an opinion or not to do this or that. I was like, even my mother's time, my mother went to a hostel to study before marriage. After her marriage, she did an MA. The economics. Then she took a break when my brothers were born. Then she did an M.Ed, and she was working before I was born. So that's what I saw all my life. So that was my template.
Okay,
but unfortunately, that's not true of many girls and women.
Yeah, fair enough. So I'll second that. So over to Geetika, ma'am, like what kind of advice you give women investors? So where to park their money, or is there any, because they are the ones who save more compared to men, because women save more. So what kind of advice you give for women?
Yeah. So, I am a through and through equities person. So I'm going to, and I honestly believe that's the best asset class to, park your money from a long-term perspective. But I think before that, I think, the topic that we touched upon, like, getting to asset class is different, is later, right? Like which asset class, whether it's gold, whether it's bond, whether it's equities, where to park your money. The first thing is that you need to start taking charge of your finances and start saying that I want to decide where I want to park my savings, how I want to do it. And that's the way to go about it. And I mean, honestly, like from my perspective, in terms of if I were to give any investment advice, any surplus cash should be parked in equities from a long-term perspective. The stock market, equities, it looks a little daunting to a lot of people from the outside. And it's not only men, it's not only women, it's also men. As Devina ma'am rightly said that, a lot of men, it seems like men understand, but a lot of men actually, I don't think they understand, and they're just taking some bets here and there. So women also need to do it. And, from a long-term perspective, even if, one were to not do any fancy stuff, but just, park their money in like simple SIPs, that itself is good enough to give you one of the best returns. You can actually double your money in from a 5 to 6 year perspective. So that's.
So with saying equities, let's start with this global markets now. Devina, what is your opinion on Indian markets? Are we quite resilient, or is it like we are going to be more volatile about the Indian markets?
Indian markets sitting today, as far as equities are concerned, I don't see a very big downside from these levels. And part of the reason was that we had we all have this impression that equities compound 15-16% a year over the long term, because that's about the Sensex compounding since it started 40 odd years ago. But if you look at each decade, even the volatility is quite high. So the first decade we compounded at 21%, then 14%, then 17%, then 2010 to 20 we compounded only just over 8%, I think 8.5 or something. And those days fixed deposit themselves were about 8. So you hardly got any premium over risk-free rates for that whole decade. So when it started moving up 2020 onwards, I knew that this would run for a while, and even relative to the globe, we were underperformers for a very long time, and only in 2021 we came in the outperforming bucket, which, as I predicted, continued in 2022 also. So still we are not above the trend line. So the big crash comes when you are far above the trend line. So we're not there yet. So I think the risk of a downside is limited, and the risk of missing out on an up move is higher. So again, this is something you need to understand, that in 40 years, if you miss out on the 10 best days of the market, you would say in 40 years, what is 10 days? Nothing. But actually that, 100 rupees, which would have compounded from 1979-80 to 44,000, you give up 2/3 of the return. That 44,000 will become 15,000 if you just miss out on 10 good days. If you miss out on 30 good days, 90% of your returns are gone. That 100 rupees only becomes 4,000. So that is why, and also when things are uncertain, people are fearful, sentiment is poor, the up move comes in those scenarios, not when everything is gung-ho. In a bull market, you don't see very big up moves very rapidly. The only exception was the rig market at Harshad Mehta time. Otherwise, you don't see that. So when things are uncertain, people say, let me wait and watch. Dekhte hain. Like last June also, I was on every channel saying, same thing, that this is time to be back. And if you miss out, I don't know whether it's the bottom or not, but it is somewhere there and you will miss out on an up move. And as it turned out, in the next 2 months, the market went up 18%, because at that time, later on, I checked the day I was on TV, the index was 15,293. So again, in some senses, you are there. So it may be like sideways or volatile for a couple of months, but if you look at a 1 year perspective, I think you are in a place where you should be buying as far as India is concerned. And globally also, 2022 was an extraordinarily bad year. Even if you look at a 100-year perspective, it was an outlier of a year. I mean, just if you look at US market, for the bond market where history is available for some 230 years, 2022 was the very worst year for the bond market. If you look at bond and equities both being down significantly, it happened once in 1931 during the Great Depression, once in 1941 during the World War II, once 1969. After 1969, first time it happened was 2022. Last year, if you looked at every regional index in equity, every regional index in fixed income, everything was down. The whole world was a sea of red. Only green was oil and gas, not even commodities as a whole, because industrial metals went up and then came down. Gold also went up and then came down. So only that, and if you knew what was going to happen at the beginning of the year, the only best thing would have been to just buy dollars and keep it under your mattress, because that went up 8% relative to everything else. But the point I'm making is that when the year is such an outlier, the next year is unlikely to be a down year. I mean, improbable doesn't mean impossible, but the probability is high that 2023 would be an up year. So that's the other background to it.
Okay, thank you, ma'am. So would say that we couldn't understand like equity markets are never linear. So of course now the Indian markets are quite volatile. So ma'am, do you see the sentiments of moving towards fixed income or debt market now? Because a lot of the people want to save more. They don't want to lose money. They are fearful now. So do you see the sentiments being moving towards fixed income now?
So actually, I'll answer this question in a little different way. As Devina mentioned, managing money is all about asset allocation. And the purpose of every asset class is different. The purpose for which you invest in equity is not the purpose that you invest in debt. Equity gives you, I would say, abnormal gains with a defined, not defined, but the known risk that there's a risk of unknown. A debt is a different purpose. And when you invest in debt in any format, it's for a regular cash flow, for your stable income. And depending on your risk appetite, you go across the curve. Because you start from a risk-free assets and you go to the credit assets. So to compare these two asset classes, though a lot of times people do it, I don't think so it is fair. Because the purpose of both the asset classes are very, very different. And as Devina ma'am mentioned very well, that 2022 was an outlier year, that both the asset classes showed you abnormal activity. And that's because we were coming from the COVID background, because there was the amount of quantitative easing that world had seen. That was absolutely abnormal. This is literally you putting your body on the steroids. And after that saying that I'm not going to have side effects. These are the side effects of what we, or I would say various governments did to protect their countries. So that nothing, it was like a black swan event for financial markets. So I can't comment on equity market, debt market. Yes, I'll put it this way. There has been a trend. Asset allocation has been coming more on the debt side because it is where we are in terms of the interest rate curve is we are coming to the highest level. So there is merit in investing in debt across the curve, depending upon what your risk appetite is. So we are clearly seeing that there has been more asset allocation on debt side.
Okay, but said that over Devina ma'am, what kind of investment approach do you advise your clients at this stage of point or this stage of market? What kind of investment approach you advise them?
Yeah, this is to me?
Yeah, Devina.
Okay. Yeah, okay. So first of all, as I said, asset allocation is important. So even if you are very young and even if you are in a stable job, I never say put 100% in equities, precisely because, the predictability is low even on a 2-3 year time frame, let alone a 1 year time frame. I told you there can be whole decades when equities don't do as well and so on. And you might need money maybe to study, maybe down payment on a home, maybe some emergency. So have some allocation to other asset classes also. Also, global diversification is extremely important when you're talking long-term financial goals. When I started working, the dollar was 12 rupees. Today it's 82, 83 rupees. So in the course of less than a career, you have lost 85% of the value of the rupee. So that is something you have to keep in mind if you are young and planning for the future. And Indians somehow, they do not take this in the terms of reference because for a long time, we did not have any capital account convertibility. I remember a time you obviously will not, when you could take out only $500 once in 3 years if you were traveling. Otherwise, you could take only $20 when you were traveling. So it was as ridiculous as that. So, but people forget that now it is $250,000 per person per year, which is a very generous limit. In a family of 4, that's $1 million you can take out in a single year. So please invest globally over a period of time and look at things from asset allocation perspective. While I'm saying India is still likely to outperform, doesn't mean that therefore you do not invest globally, because this is not a very short-term decision that you have to take. As I said, I am relatively positive on 2023, and for our global products, we have a multi-asset approach. And because we think there is merit in understanding that and having a dynamic and tactical asset allocation. So not have a fixed asset allocation and to have that flexibility, just like in COVID time, beginning of March 2020, we thought something very strange was happening because I saw school, I tweeted this also, the schools have shut down in Italy and Japan. And for the first time, we saw those visuals of tourist places in Rome with no person there. Later on, we got used to those photographs, but that was the very first time. And I said, what the hell is happening? This didn't happen during the World Wars even. And we went totally risk averse. We went totally out of normally in our multi-asset global products. For instance, we have 70, 80% equity. We went to single digit equity, as skewed as that. And we went into cash, we bought insurance, and all of that meant that when the crash came in India and US and globally, our products were down only 8-10% as against 35-40% for general market. So that flexibility has to remain because no asset class, no geography, no theme, no sector runs forever. This is something you have to remember. 2021, there were all these NASDAQ funds being launched in India, NASDAQ ETFs being launched in India. And I said at that time itself that just because the NASDAQ has done stupendously well for 3 years, doesn't mean it will continue forever, but people, don't focus. So you have to have, sometimes like for now, we think emerging markets are becoming better bets now, whether that's only a short-term move or whether this is a multi-year move, we are still watching because like 2003 to 2007 was another period when emerging markets did very well. The index itself went up 3.5, 4 times. India went up 6, 7 times. Brazil went up 10 times. Whereas the US could not come out of its post-tech crash blues. But NASDAQ did not take out its 2000 high till, 2015. So people forget history, people forget data. We are extremely data driven. We look at the facts without the blinkers. At least try to without the blinkers of storification. So that is the thing. So have asset allocation and have an asset manager who understands how to reallocate because as I said, no theme runs forever.
Yeah. With said that, if I don't take this question, that's unfair from my side. So, do you think the 2008 banking crisis has been repeating now because we have a Silicon Valley Bank, Signature Bank, and now Credit Suisse Bank is also getting into the list. So, are we in that situation?
I don't think so because that was a different problem. And typically banking crises come out of that kind of problem, which is a credit problem that you made the wrong loans or the wrong credit. And then, of course, then you built it up with securitization and all that in 2008. That's a different thing. In this case, like if you look at SVB, the real problem was they didn't do enough lending. Instead, they put money into investments and that to long dated, not so liquid securities. And when interest rates went up as rapidly as they did, the value of these securities fell. So that's how fixed income works, that as interest rates go up, the bond prices fall or the securities prices fall. And the longer dated they are, the more they fall. And again, this was, I was just, after that, again, I looked at data. I said, like, this is in 1 year, interest rates have gone up 4.5% points. When did it happen last? And the last time it happened was in 1980 and 81. And coincidentally, this was before SVB was formed because SVB was founded in 83. So this is the thing. See, there's a very good book on financial euphoria, very thin book, just you can read it in a day, John Kenneth Galbraith. And this is about how bubbles form in markets. And this is like in finance, the remarkable thing is that nobody ever remembers history. So it strolls out so fast and therefore it repeats very fast. So I was talking to a friend who used to work in a large international bank, and he was saying that we sidestepped the 2008 crisis only for one reason, because one of our seniors remembered the Asian crisis when he was posted in Asia and was actually barricaded all night in a bank branch, sleeping on the floor while people were shouting death to the bankers outside. So he remembered how bad things could go. So that is the thing. But I mean, coming back to your question, I mean, I don't think that, at least as we sit today, it doesn't appear that the contagion would spread that much. And for now, the regulators have backstopped it by saying that all the depositors will get back their money. I mean, in the second round, whether that causes moral hazard, a few years down the line, that's a different question. But for now, they have contained it, even though, actually the European bankers and regulators are really mad at the US because they had told everybody else not to do such a thing if next crisis came. As far as Credit Suisse is concerned, I wrote that article and a Twitter thread on SVB. So people have been saying write on Credit Suisse, but what does one write on Credit Suisse? Because they are involved in every crisis and scandal that ever comes along. So right from busting sanctions to money laundering to you name it, Credit Suisse has been there every time. But they're a systemically important bank. So again, the regulators have said that they would provide liquidity. So I don't see, this, because this is the origin of this is not really excesses in the banking system as much as that the whole what Ankita mentioned, that there was a lot of free money or easy money in the whole system, and therefore interest rates were near zero, and that caused their own excesses. So that is what brought this up. So I don't think we are headed to 2008, at least from what is now publicly available. But
Okay.
banking is a confidence game. That is the whole thing, because no bank can pay back all its depositors. So you just have to manage that confidence game, that all the depositors don't come asking for their money, because no bank can withstand a bank run.
Okay. So over to Geetika, ma'am. How do you see equity earnings right now? So how positive are you for 2020-23, the second half of 2020-23?
Yeah, so there is a lot of volatility globally, which I think Devina and Aditi have already spoken about. But I think when I look at least the Indian equities, they seem to be, in a reasonable, the outlook looks fine. I think the way India was at least different as compared to the other geographies were that India was in a deleveraging cycle ever since 2015. After, the PM Modi came into power, there were a lot of reforms that happened, IBC, RERA, GST, which curtailed the flow of capital in the economy, right? And that's why we were in a deleveraging cycle. And we are actually going into a rising interest rate environment, with pretty lean balance sheets. Not only the banks, but corporates, everybody is sitting on extremely good balance sheets. We've already had, a pretty steady rise in the interest rates, but there are, no instances of corporates getting blown up, stresses getting created in the Indian economy. So I think Indian earnings are at least much better positioned when I look globally. US obviously has problems. Europe is coming out of a very high inflation, and China is still getting into that, opening up. But India, there are pockets like the financial markets. I think banks, the earnings will remain in a good shape. At the same time, there are some other themes such as manufacturing, which are benefiting from pickup in public capex as well as private capex. There is some shifting of supply chains and companies at the margin benefiting from China +1, Europe +1 kind of themes. This is not across the board, but there are some management, some companies which are definitely using these opportunities and investing in the right manner. So while from the next 12-15 months perspective, though I think the market will be a little bit sideways because we're also, the starting point is relatively high from a valuation perspective, but I think there are still pockets of opportunity that one can get where, the earnings seem to be, that they'll be resilient next year.
Okay, thank you, ma'am. Over to you, Aditi, ma'am. See, US yields have come down like never before. So is does it indicating any recession, or is that it doesn't mean that inflation, we have topped our inflation? What is your opinion on it?
So Akshara, again, I'm going to redefine the question. First, let's talk about US yields went up never like before.
Okay.
From 0% to 4.5%. That was a drastic move. And as Devina ma'am also mentioned, this is not what we've seen for last 4 decades. The inflation which US is facing at this point of time, they have not seen this scenario. Europe has not seen this scenario. What you saw was a blip in the recent past, which was as soon as 1 week. Because what confused the market was the banking, I'm not going to say the crisis as yet, but I would say a banking accident. Because what happened to SVB or what happened to Signature, and then we are talking about Credit Suisse, that confused the market. And something like this happens, and now we have the experience of the past, of what happened in 2008, 2013. So there was a huge learning which people had. So immediately people reacted to it, and they wanted to move out of the risk assets and go into the risk-free assets. And that is why we saw the correction. That correction has happened. But having said that, that confused the market for the time being, that whether, which way will the central banks think? Is it they will give more importance to the inflation, or will they give more importance to the current problem at hand, which we do not have the size as yet? So it's in a very uncertain space. But what we see and what we've been dealing with is because of the positive effect of COVID. Because in COVID, we got so much of liquidity that we were not used to. That resulted into inflation. They had to increase the rates. And that rate increase, when is it going to go into the pivotal point, is a little unpredictable. But having said that, we have traveled a long journey. And that is why we've seen inflation also easing out from 9% to 6%. But still, from what the developed economies have been used to, 6% is very high. Even on a relative term, it's not. So we as human beings tend to look at only happy news. So when you look at data, oh, 9 se 6 ho gaya, but from where to where it went, it is still not an acceptable level. So there is some more distance to go. And that is why we've been seeing that the asset allocation on the debt side has been quite higher from the risk-free asset perspective also, and from the, I would say, credit perspective also, because the returns are quite attractive. So I would not say that pivot is that close.
Okay.
We are yet to see. And whatever correction that and so I'm not going to say that rates have come down, there has been correction in the market because of the circumstances. That's how I will look at it.
Okay, that was a different perspective altogether. So, of course, we are coming close to the end of the session. So let me have one common question to all of you. Is like this, every year we have a theme for Women's Day. So this year theme was to embrace equity. So like how do you do that in a one single line, probably? Can I start with Aditi ma'am?
Sure. For me, embrace equity is ownership, to give a sense of belongingness. And the markets that we are in, human capital is the biggest capital that we have. So if we can impart ownership, responsibility with a sense of belongingness, then you are here to stay. And it's beyond money, because we all come to work for money. But there's more to it when we come to our workplaces. So that's how I will look at it.
So over to you, Geetika ma'am. So
yeah. So I mean, embracing equity for me is, having the culture in the organization where women feel free, and they feel that power, that freedom, that they can go up to their managers or bosses and ask for what they need. Be it special situations like coming out of a maternity break or, demanding better flexible hours. We need to have that culture, because a lot of women, I think, don't even think that, they can go up to their managers and demand what they need, and probably at some point of time, drop out. So that's, having that culture is, I think, the most important for me.
So talking about the cerebral opportunities that are available. So that's what you were talking about. Yeah. So over to Devina ma'am. So what does that mean to you? Embrace equity.
Well, first of all, that the default human being is not a man. So if you're interested, read this book called Invisible Women, which is about that everything in the world is designed assuming the default human being is a man, right from seatbelt design to what are the heart attack symptoms, to testing of pharmaceuticals, how cities are organized. They all take only the male into account, which is why actually you'd be surprised to know that in car crashes, women die more because the airbags and seat belts are not designed for them. So first of all, recognize there is like 50% of humanity whom you are not catering to. So it was quite a shocking book and a very eye-opening book.
Okay, thank you. So with that, we come to the end of the session. I want to thank every one of you for joining the session and embracing this. So thank you all. So we'll again meet again with some other special occasion. Thank you for participating. From PMS.
Thank you, and great being here. And hopefully it should not be a special occasion that you need to talk to women. As I said, we are 50% of humanity.
That's here.
Okay.
Thank you, Akshara, for organizing this. It was great chatting with everyone. And it's great to say that women empowerment is taking so much of importance. And I think we as women are the biggest support of each other. And I would want to say, somebody wished me Happy Women's Day. I said, it's Happy Women's Day every day. Why today? Come and wish me every day. So thank you so much.
Thanks, PMS Bazaar, for having me. It was great sharing views and sharing the panel with women like Devina.
Thank you. Thank you all.